Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @Pless. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and ES, the futures contract, is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the futures contract NQ is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups. And when I talk about setups today, I will be focusing on an underlying asset, and setups to that asset can be taken with futures contracts, stock shares, or options, depending on the asset. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Here's my agenda for today, Monday, June 17th. First of all, I want to go over news items, economic data, and events for the week. Then I'll go through my positional analysis for today. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items. First of all, Wednesday is a market holiday. That is the Juneteenth holiday. The stock market will be closed, and I believe the futures market will close at 1 p.m. on Wednesday. So I will not be streaming on Wednesday. All right, for the economic data, tomorrow, Tuesday, retail sales data comes out at 8:30 a.m. Eastern Time. On Thursday, building permits also at 8:30 a.m. Eastern Time. And the big event for the week is the options expiration, very heavily call-dominated options expiration. We'll take a look at that in just a moment. And also there are a number of Fed speakers throughout the week. All right, let's take a look at this options expiration. Here it is. This is the options expiration concentration chart. What this chart is showing is delta notional at each expiration. And call delta notional, that's shown with the orange bars. Put delta notional, shown with the blue bars. So you can see this is a very heavily call-dominated expiration. And remember, the assumption is for an index that traders are short calls, market makers are long calls in this positive gamma environment. So again, very heavily call-dominated options expiration. Looking for, Spotgamma is looking for about a third of that call gamma to expire on Friday, and that should open up the potential for greater movement and more volatility, perhaps consolidation or maybe a move lower. And note, this is for the S&P 500, NASDAQ, and Russell 2000. All right, so big call-dominated options expiration coming up. I'm covering this today because the next time I will be streaming is Friday. So I'm going to cover a couple things that I would not normally cover until later on in the week, since, again, I will not be streaming again until Friday. All right, so very call-dominated options expiration coming up. Looking for potential weakness maybe toward the end of this week and early next week. All right, let's move on now to positional analysis. I'm going to start with the S&P 500. This is the ES futures in Bookmap. Note, I am showing the September contract. This is the U contract. So I've rolled over from June to September. So again, this is the September contract. All right, before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the SPX, starting with a one-day chart for SPX. Go through this quickly. We've seen this before. Big rally began, 5-month rally last year, October 30th. Correction began this year, April 1st. And then the Monday after the April expiration, tone change from correction to the rally resumed. And now SPX continues to make all-time highs, higher lows, higher highs. All right, so that is a one-day chart. Now let's pick up the last portion of this rally with a 1-hour chart. One-hour chart showing rally, consolidation, and then it looks like SPX is now breaking above this consolidation that was somewhere between 5,400 and 5,450. So SPX today breaking above the 5,450 level, breaking out of that consolidation that began last Wednesday. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. The dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, based on the closing price for SPX from last Friday. Note, I do update these levels in Discord every evening the day before. All right, so SPX is trading above the upper daily expected move for today and heading toward the upper weekly expected move. All right, let's take a look now at the other levels on this chart. These are the dark red lines are Spotgamma levels. These are provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. First of all, here's the put wall at 5,300. That's a strike with the largest net negative gamma that can be expected to act as support. That level did move up from Friday. So the put wall at 5,300. The next level up is the volatility trigger at 53.95. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to subdue or decrease volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. That level also moved higher from Friday. The next level up is the absolute gamma strike. That's just above the volatility trigger at 5,400. That's a strike for the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. And finally, the next key daily level up above is the call wall at 5,500. That's a strike with the largest net positive gamma that can be expected to act as resistance. And it looks like SPX has the call wall, 5,500 call wall, clearly in its sights, perhaps for this week or maybe even earlier. All right, so those are the key daily levels. And now let's take a look at, wrap up our view of SPX with a 1 minute chart. Going to squeeze this down a little bit so we can see price action. Here's that consolidation rectangle. SPX clearly has broken above the 54.50 level, up above the upper daily expected move. And now there are a couple of Spotgamma levels up above. There's the 5,500 call wall, and then a combo 1 level just above that. All right, so that's SPX. All right, now let's go to Bookmap. Not exactly the price action that I was expecting today. I was looking for more of a slower grind, more mean reverting price action. But anyway, this is what it is. ES Futures and Bookmap, again, the September contract. And note, I do have a number of levels on this chart. First of all, I do have Spotgamma levels. Those are shown in white, SPX and SPY levels. Let me point out a couple of key levels. There's that 54.50 level that I mentioned before. That's a large gamma 3 that was noted as resistance in the Spotgamma AM Founders Note and did not prove to be much resistance. Just above that, there's the SPY 545 call wall. Also, not much resistance today. And ES is trading above its upper daily expected move. And there's the upper weekly expected move. And earlier today, let's see, this is around, let's see, 542, SPY earlier today, SPY 42, 542, as well as this liquidity here. Let me darken up the heat map just a little bit. So the heat map and Bookmap is showing a history of the limit orders. These were limit buy orders, and this is at ES 5490, acting as support, rejection. We'll talk more about setups in a few minutes, and aggressive buyers come in. All right, so those are the levels in play for today. And note that there is a big difference in price now between ES and SPX. So every rollover, that number will expand pretty substantially. So last Friday, when I was using the June contract, the ES to SPX offset, the difference, ES minus SPX, was 4 points. And today it is 71 right now, ES minus SPX 71. It was 69 earlier this morning, so I'm showing this SPX 5450 at ES 5519, and it looks like it should be ES 5521 right now. All right, let me check for questions. Hello, Mark. Welcome. Glad you're here. Thanks for the thumbs up. Mark says, I'm new to futures. Which data package do you suggest in DX feed? I want full depth for ES only. Well, first of all, I suggest rhythmic data for futures. I've used rhythmic data for quite some time. The difference between DX and DX feed and rhythmic data is that rhythmic provides MBO data, market by order data, and that's used by the stops and icebergs indicator that I have shown in my subchart here. That's icebergs, that's stops, as well as the on-chart indicator. So you can subscribe to rhythmic data from the Bookmap marketplace. So again, that is my recommendation for futures data, rhythmic data. And I do use DX feed for stocks. All right, so that's the S&P 500, grind higher. One factor coming into play today, as well as the rest of this week, is Vanna with implied volatility dropping. Also Charm, that is the change in delta with a change in time as time passes and expiration approaches. Market makers' short calls will start to lose value. All right, so that is Vanna and Charm coming into play. All right, so they can buy futures. All right, so Vanna and Charm in play for today, as well as the rest of this week. All right, let's move on to NASDAQ. Very similar price action. Let's take a quick look at the underlying index chart. So this is the NQ futures and Bookmap. I'm going to go take a look at the QQQ. So QQQ trading above the call wall, 480. That did act as resistance earlier today. Price broke above that. All right, so there's QQQ trading well above its 480 call wall. Let's take a look at NDX. NDX trading above its call wall. 19,500, which is actually below the put wall at 690 and up to this combo 1 level, combining NDX and QQQ, gamma weighted open interest into one level in this combo level. All right, back to NQ futures. You can't see the label here, but this is the 480 call wall. Again, acted as resistance earlier today. Price book above. Now up above that combo level. Right around NQ 20,200. All right, so again, I have my own cloud notes and bookmaps so I can show key levels. So NQ is almost up to the upper weekly expected move, trading above the upper daily expected move shown by that blue line. We'll take a look at setups in a few minutes. All right, shifts and levels. Again, I mentioned SPX, volatility trigger and put walls shifted higher. There were no shifts in levels for SPY, and for NDX and QQQ, the volatility triggers and put walls also shifted higher. And for the S&P 500 and NASDAQ, both the call walls and absolute gamma strikes remained unchanged. All right, let's wrap up our positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. Gamma notional right here, market maker's position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Note all these numbers are positive, and they did shift slightly lower for SPX, NDX, and QQQ, shifted slightly higher for SPY. All right, so positive gamma environment, looking for really more mean reverting price action. And if not, a slow grind higher. All right, let's move on now. Let's take a look at some setups. And as always, I'm going to start by taking a look at what options traders are doing today. And options traders are taking positive delta positions. So what this chart is showing, this is the HIRO chart, HIRO. So everything that we've looked at so far other than the book map is based on static data, those levels based on gamma weighted open interest that's updated once a day, sometime overnight. Now let's move on to real-time data to execution. So again, this is the HIRO chart, HIRO, Hedging Impact Real-Time Options. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So this is the index version of the HIRO signal for the S&P 500. There are two lines on this chart. The white line is price for SPX. The purple line is the HIRO signal. And a rising HIRO signal indicates traders are taking positive delta positions, rising for the day. And a falling HIRO signal indicates they're taking negative delta positions. So positive delta could be buying calls and or selling puts. Negative delta, buying puts and or selling calls. All right, let's take a look. I'm going to take a look and see what traders are actually doing today by shifting over to puts and calls. I'm going to have to jump to avoid auto zoom, jump back. So the rising orange line shows they are buying calls. Net for the day, this blue line is negative notional value, indicate they're buying puts, but call buyers definitely driving price higher in the S&P 500. All right, let's zoom in on this signal. So again, this is the This is the index signal for the S&P 500. Let's take a look at the equity signal. So this is let me zoom back out. What this chart is showing is options trades and market maker hedging activity for a combined signal of all S&P 500 stocks. So this is showing options trades, market maker hedging activity in all 500 S&P 500 stocks. This chart is showing they are buying calls, shown by the rising orange line. They're also selling puts, shown by the rising blue line. I'm going to shift back to the total signal. Go back to the S&P 500 signal, and we'll take a look at the entry point for a long this morning. The one setup that I want to talk about. Note the choppy price action, choppy hero signal, this move lower, and then this flow alert comes in, signaling significant options activity, often can act as a mean reverting signal. When this hero flow shifts from negative delta to positive delta, and that's exactly what happened here. Hero signal shifted, a little bit of price chopping, and then right after 9:55, the S&P 500 started to move higher. All right, let's go take a look at Bookmap. Let's zoom in. Let me tone down this heat map just a little bit so we can see the volume dots. And give me just a moment while I adjust the screen here. All right, here's where the hero flow, remember right around 9:50, 9:55, hero flow shifted from negative delta to positive delta with that flow alert giving you a signal. Aggressive buyers start to come in. You can see the large volume dots. The volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. And you can clearly see very large green volume dots, a lot of aggressive buyers coming in. You can also see the volume here, very large green bars. And finally, cumulative volume delta shown on the subchart with a dark blue line. Oops. Cumulative volume delta, very sharp increase. So very clear buy signal right around 10:30. Pullback, price checks right around the SPY 542 level and this SPX 5426 level. Then price continues to make a series of higher lows, move up, expansion, then consolidation, then expansion again. Consolidation, expansion, consolidation, and expansion, etc. All right, so that's the S&P 500. Pretty clear entry signal for a long as the hero signal shifted from negative delta to positive delta, and those large green volume dots indicating aggressive buyers coming in. S&P 500 continues to continues to move higher. Terminator asks why it popped. If you're looking for an underlying reason, I don't know. I'm just reading the signals here. Certainly, the shift in hedging flow, options and hedging flow, combined with large aggressive buyers coming in, was what moved price higher. So Terminator, I don't know if there's any underlying reason, any news or anything like this, but I'm just reading the signals in Bookmap here. Cumulative volume delta continues to rise, shown by the rising blue line. Buy stop orders helping to fuel the move higher. So that's what's moving ES. And then also options traders. Let's go. So the hero signal rising. And when traders take positive delta positions, market makers take the opposite side, and they have to buy futures to hedge their delta exposure. So that's what's driving price higher. All right, let's take a look. Let's shift back to puts and calls. Let's go to the other hero signal for the S&P 500. That's the equity signal. A little bit slower to respond this morning. I thought the index signal provided a more clear signal right around that 9:55, 10 a.m. reversal. And then later on, this hero signal for the SB equities really started to move higher, maybe starting around 10:30, indicating in the equities traders are buying calls and selling puts. Market makers take the opposite side, and they have to buy stock to hedge their delta exposure. All right, so this continues to move higher. Very steady progression. This is very mechanical looking, algorithmic looking. Buying calls and selling puts. Again, very steady, mechanical, algorithmic. All right, let's move on to NASDAQ. Again, there are two signals for NASDAQ. I'm going to shift back to total, go to the index signal first. This is showing options trades and market maker hedging activity for a combined signal of NDX and QQQ. And note these signals, the index signals, are typically a lot more choppy than the equity signals. So we'll look at this first. Let's zoom in and note there is a Mag 7 signal that we'll take a look at in just a minute. So while I'm zoomed out, let's take a look at that. So this is the equities version of the hero signal for the NASDAQ 100. And this is showing options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. All right, let's go back to the index signal first. Again, a lot more choppy, but did provide a good signal this morning. I'm going to zoom in on this chart, stick with the total view. Zoom in on the morning. And just like the S&P 500 index signal, right around 9:50, the hero signal shifted higher, signaling a good entry point for long. Let's go to look at Bookmap, go to the NDX. I'm going to zoom in. Looking at the volume dots, aggressive sellers on the way down, aggressive buyers. Green volume dots come in, and the NASDAQ makes a series of higher lows as options traders are taking positive delta positions. Market makers take the opposite side and buying futures to hedge their delta exposure. And then right around 11, that's when the NASDAQ broke above that 480 call wall. All right, let's go back to the hero signal. All right, 11 o'clock, that's when NASDAQ breaks above that 480 call wall. That's also the NDX 690 put wall. All right, let's move on. Let's take a look at the Mag 7 signal. I'm going to shift to puts and calls. Go to Mag 7. $10.30 is when they really started. Well, actually, right around 9:50, started buying calls. Little pullback. 10:30 started buying calls again, and then started aggressively buying calls right around 11 when price broke above the 480 call wall. And this price axis is showing QQQ there. I'm sorry. That's QQQ, price breaking above the 480 call wall as traders were aggressively buying calls in the Mag 7 stocks. All right, let's zoom out. All right, so traders continue to buy calls and sell puts. All right, let's take a look at some stocks. And before I do that, I do, again, since I will not be streaming again until Friday, I just want to point something out, possibility, something that can happen on major expirations, call gamma unwind. And this is Equity Hub, and I'm showing stocks in my main watch list, and I've ranked them by next expiry gamma percent. And note the expiration date for all these stocks, of course, is this Friday, 6/21, the big monthly June options expiration. So for a stock, Spotgamma assumes that traders are long calls, market makers are short calls. Market makers have to buy stock to hedge their delta exposure. And as expiration approaches, these calls start to lose value, and traders may sell their calls, may take profits. Market makers no longer need some of their long stock hedges and can sell those stock hedges, and price has the potential to move lower if traders don't continue to buy calls. So that's a call gamma unwind that may come into play later on in the week. We'll talk more about that on Friday. All right, just something to keep in mind for this expiration coming up on Friday. All right, now let's take a look at some stocks. Take a quick look at Apple. Grind up continues up to the 220 call wall. Let's go take a look. So this chart, hero chart, is showing that traders are buying calls and actually a little bit slow to get started. Several flow alerts come in. Price breaks higher. Looks like the call buyers were actually following. Doesn't make much of a difference. When traders buy calls, market makers sell the calls, they have to buy stock to hedge their delta exposure. Take a look at Apple. Grind higher continues toward the 220 call wall. Looks like initially a lot of aggressive buyers call green volume dots, aggressive buyers coming in, price breaks above VWAP, sharply rising cumulative volume delta, flattens out. Now some sellers are coming in. Cumulative volume delta falling. So traders are, again, aggressive sellers selling Apple stock coming in. Let's go back to Hero. All right, so in Apple, if the call buyers take their foot off the gas, again shown by the rising orange line, maybe up at the 220 call wall, then price could move lower if those aggressive sellers remain in place. All right, the next, AMD. Pretty weak earlier today. There was definitely some weakness in semiconductor stocks earlier today. Let's take a look. Traders initially selling calls and buying puts. That's shown by the falling orange line, blue line. Traders taking negative delta positions. When both lines are moving in the same direction, that's typically a very powerful directional indicator. And somewhere between 9:45 and 10, Hero signals reverse. Traders start selling puts first. Then they start buying calls. Price moves higher. And now they continue to buy calls and sell puts. Let's go back, take a look at Bookmap. Go to AMD. Now AMD trading above the opening print, sharp move lower. Magenta dot, that large magenta dot, opening print, quick move lower. Traders start taking positive delta positions, and it looks like there are more green volume dots coming in. So aggressive buyers coming in as price reverses higher, and traders are taking positive delta positions. This indicator in the subchart, I've got two indicators in the subchart. The first, cumulative volume delta, flattens out, starts to rise as aggressive buyers start to come in. The other indicator in the subchart is the market pulse price change indicator. I use this to mark entry points, pullback entry points. Not every extreme here, the lower and upper extremes shown by the bright red, bright green, not everyone notes a pullback entry, but the good pullback entries are noted by the market pulse price change indicator. You just have to watch the order flow, hedging flow, and then confirm your pullback entry in this case for a long, with these market pulse price change extremes. All right, so that's AMD. Weakness in the morning, didn't last long. AMD makes a double bottom just above 154 as options traders start buying calls and selling puts. All right, the next stock I want to take a look at is ARM. Similar price action. Note for ARM, 160 is the call wall. Weakness of the morning, price breaks below the 160 call wall, below VWAP. That's shown by the light blue line there. Makes a double bottom. Aggressive buyers had already started to come in. You can see that by the rising cumulative volume delta that's shown by the magenta line in the subchart. Trend break, aggressive buyers. And price moves back up to the 160 call wall. Let's see what options traders are doing. Let's go to ARM. Not doing much with puts. That's shown by the blue line. Let's zoom in just a bit. Here's the 160 call wall. Price breaks below it as traders are selling calls. So they are aggressive selling calls till about 950. Continue to sell calls. Took their foot off the gas. Buying a few calls. And now right around 150, some aggressive call buyers have come in. Looks like large block orders shown by these vertical lines. Large institutional orders, traders buying calls. Let's go back to Bookmap. So those call buyers taking their foot off the gas, as well as a lot of aggressive buyers coming in, driving price higher in ARM. All right, the next is Meta. Little weakness in the morning. Now Meta grinding higher. Let's see what options traders are doing in Meta. Zoom in. So price action really driven by calls. Call sellers early. Flow alert signals significant options activity. Price breaks below the 500 call wall, key gamma strike. Then options call buyers start to come in. Looks like some large orders there. Call buyers coming in. Traders buy calls, market makers sell the calls. And they have to buy stock to hedge their delta exposure. So net for the day, traders are selling puts and buying calls. Also, Meta has broken above the 500 call wall breach. So that's where most of the calls are concentrated. Again, Spotgamma assumes that traders are long calls, market makers short calls. As those calls go deeper in the money, market makers' delta notional becomes more negative, and they have to buy calls to hedge their delta exposure. All right, let's go back to Bookmap. All right, Meta, well above the 500 call wall. Break above. Somewhat of a test there. Also break above VWAP right around 1015 as traders start buying calls. Pullback entries confirmed with the market pulse price change indicator. Looks like this was acting as a leading indicator. So you can see the extreme comes in, and then the market pulse price change indicator starts to rise before price starts to rise. So nice leading indicator there for this pullback entry above 500. Another pullback entry. All right, the next, let's check on NVIDIA. So looks like consolidation today for NVIDIA. Let's see what options traders are doing. Go to NVIDIA. All right, so in the morning there were call sellers. 130 is the key gamma strike. Looks like NVIDIA found support around that level. And as price reaches that level, the call sellers take their foot off the gas. All right, so net for the day. So let's take a closer look at this. So this is when the options traders took their foot off the gas for both puts shown by the blue line, calls shown by the orange line. Then right around 12:20, they started buying calls, selling puts. Price moves higher, they take their foot off the gas again. Also, looks pretty mechanical as well, and more consolidation. So overall net consolidation for the day. NVIDIA did find support at the 130 key gamma strike. Let's go back to Bookmap. Cumulative volume delta is negative for the day. Traders taking a break in NVIDIA. A lot of aggressive sellers on the way down to the 130 key gamma strike. Then consolidation just above VWAP. All right, let's take a look at Tesla. Very bullish day in Tesla. A lot of green volume dots, a lot of aggressive buyers. Rising cumulative volume delta, hardly any magenta dots at all in Tesla. A lot of aggressive buyers. All right, let's see what options traders are doing in Tesla. Call buyers definitely driving price. Shown by the rising orange line. There are some key Spotgamma levels. First of all, the 175 key gamma strike down below, 177.50 hedge wall, and then price has broken above the 185 call wall. That call wall breach dynamics coming into play. Let's go back to Bookmap. 185 call wall. Though the consolidation around that level initially acts as resistance, then support, as aggressive buyers and call buyers move price higher. All right, does anyone have any stocks they want me to take a look at? Let's go take a look at Hero. Let's go back. So it looks like maybe a little bit of consolidation again in Tesla. Call buyers, at least for the moment, have taken their foot off the gas. Again, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's check on the S&P 500. Go to S&P equities. Taking a little break as well. Check the Mag 7. Also taking a little break. All right, let's take a look at something else. Let's take a look at any alerts. This indicates Google is within 1% of the call wall. Looks like it's still pretty far below the 180 call wall. All right, let's go back to Bookmap. Take a look at S&P 500 signal. Go back to All right, so this is the ES, upper weekly expected move. Looks like some aggressive sellers definitely coming in just below that level. Note that level is not exact, especially with the rollover, but pretty close. Upper weekly expected move, acting as resistance today so far, but pretty substantial move in the S&P 500. Sharp drop in cumulative volume delta. Also note net for the day. Large traders are fading this rally with iceberg orders. That number for the day is negative. All right, some buyers coming in. Traders want to test the upper weekly expected move again. Let's check NASDAQ. All right, so it looks like this is some interesting levels here. This is the NQ 20,250. That's also right around the upper weekly expected move for NQ. Just above that is the 20,000 level for NDX. So in between these levels, some pullback, this very mechanical move up has slowed down. Don't know if this is a reversal or just a pullback, but certainly you would expect some sort of reaction of the upper weekly expected move. Let's go back and check the S&P 500. But not in the NASDAQ, not as many aggressive sellers as in the S&P 500. All right, I've got about a minute left. I'll be glad to take a look at stocks, any stocks. If anybody has any stocks they want me to take a look at, any questions, now's the time. Last call for stocks and questions. Go back and check, see what options traders are doing. I'm going to shift to the total signal. Total signal for the S&P 500. Starting to make lower highs. Check the equity signal. Also flattening out from this very mechanical increase. Consolidation. Let's check the NASDAQ signal. Provided a good signal earlier in the morning, now just too choppy. Mag 7 signal. Not quite as steady and mechanical as the S&P 500 signal. Also showing a pullback. Let's zoom in on this. Go back to Bookmap. Pick the S&P 500. A viral, hope I'm pronouncing that correctly. Hello, welcome, glad you're here. Asked how do we set up our Bookmap like your screen. That will take more time than I have left. Just very briefly, first of all, for futures, I use rhythmic data. For stocks, I use DXV data. And for futures, you can see I've adjusted the colors for the volume dots. Have not made any change to the colors for the heat map. I have adjusted the intensity. All right, also for my levels, I use an add-on called price lines, not price levels, price lines. That is a paid add-on. That's what I'm using to show all these levels. It shows labels and the lines on my chart. And then in the subchart, I have stops, or icebergs, stops, and cumulative volume delta in the subchart for futures. And note I am showing stops and icebergs in the subchart in some mode. All right, so that's futures. For stocks, again, I'm using DXV data. Let's go to AMD. So for stocks, again, I've adjusted the volume dots. If you change the volume dots for any one instrument, it changes all of them. So I like magenta, and for negative or sells, and bright green for buys. I have cumulative volume delta in the subchart, and then also the market pulse price indicator. Let me show you where that is. Market pulse price indicator. That is included with the MBO bundle. I think it may be also a separate subscription. And for each of these, let's go to AMD. I have made 2 adjustments. I've changed this to load all historical data so I can open it up later on in the day if I want to, and it'll show the history of the market pulse change indicator. And then I've also changed the color settings. So those are the 2 changes that I've made, showing I like the brighter colors for the extremes. All right, so you can go back and rewatch this, and then if you have any questions you can post them in Discord later on. All right, everyone, my time is up. I want to thank you very much for watching. All right, let me check for questions. Hello, Floyd's Garage. Welcome. And Mark asks, where do you get the price lines from? That is an add-on that's available in the Bookmap marketplace. So price lines, you can buy that, subscribe to it, and I think it's a one-time fee in the Bookmap marketplace. All right, everyone, thanks for watching. Have a great week. Remember, Wednesday is a holiday. I will be streaming again on Friday, and we'll talk about the options expiration. All right, everyone, thanks. Thanks for your questions and comments. I will see you on Friday. Bye.